So then once you think of that narrative that I've laid out, then you understand why the Bitcoin ETF is something they want. Why? Because it's now in the hands of Wall Street and away from the decentralized world. So you basically got control over the capital flight. And they know that that's going to mop up huge amounts of demand and stop people going to the distributed version of it.
Right. No, that's excellent.
And it makes sense.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discuss about Bitcoin and crypto according to Raoul Pal. You will see why the Bitcoin ETF makes sense after considering the story Raoul Pal told is something people desire. And the reason for this is that Wall now has it. Raoul say, you have influence over the capital flight since you're on the street and away from the decentralized world, and they are aware of this. That will absorb enormous amounts of demand and prevent people from visiting the widely disseminated version of it correctly. No, that's great. And Raoul Pal understand their motivations and that it is genuinely for retail in the regular run of events. Although it will function well, they are essentially tourists because they lack their possess ownership of their possessions, which is the issue that crypto is around built for in the first place. And lots of things Raoul Pal discuss, so please watch the video to end and share this video and subscribe our channel Everyday Finance. Thanks.
No, because the Bitcoin cycle is the macro cycle. Don't forget, all assets are going up and down in this 4-year cycle, as is the economy, as are interest rates. It's all due to 2008 and resetting interest rates back to zero, all the major governments around the world. They then issued their debt in this 3 to 5 year sector, so let's call it 4 years on average, and this debt refinancing cycle is the cycle that drives Bitcoin, all crypto, all assets. It's also the presidential cycle. They're all the same thing right now. Right, this is this super correlated world.
Yeah.
So within it, the first part, what I call macro spring, which is what we've been in, the early part of a bull market, when inflation is starting to fall, growth is still falling, but starting to try and stabilize somewhere. Normally, that's when Bitcoin outperforms. It's like in the beginning of a bond market rally, it's treasuries that outperform. Then as people get confidence and more liquidity comes in the system, they start taking more risk and it goes further out the risk curve. And that's when the alts start performing. So we're transitioning currently from macro crypto spring to macro crypto summer. So that's what's known as alt season. And it starts with the higher quality tokens first. And then at the end of it in 2025, it's kind of everything goes up ridiculously. Yeah. So the regular macro cycle is exactly as you're saying. Governments want to bribe voters, so they give out as many candies as possible, and that's stimulus. The central bank is involved in this because it has to help refinance the government finance debt, so they do want to get interest rates lower. They're talking a harder game now because I think they want inflation to undershoot, because then that gives them the cover to use the balance sheet, to print money, do all of the things that they do. And that's fine. And that would be a normal crypto cycle. We've seen that pretty much every time we get into the halving year.
Right.
But we are seeing some bigger dynamics here, which is we could see a huge amount of capital coming in because of the ETF. And because of a lot of people are building on real world assets. We're seeing money transmission mechanism stuff being done. We're seeing new use cases of NFTs. They were new for the last cycle. What are we going to use them for? When Solana can mint 1 million NFTs for $100, well, you can use it for ticketing. You can do all sorts of things we can't yet imagine. And we've got the CBDCs are going to be rolled out in some places within this cycle, which is, again, using the underlying chain and the ongoing growth of stable coins. And we're seeing brands come into the space to use kind of Web3 as a way forward for new business models, which is why I call it the everything everywhere all at once, which means that we could have collective madness where kind of more like the 2017 cycle,
right,
it just goes crazy. Now, even I expected the same kind of finish of the 2021 cycle. I got that spectacularly wrong. But maybe we get it this time around.
According to Raoul Pal, despite going through this remarkable macro event, its bear market was identical to all other bear markets. Circumstances with this absurd inflation and high, as you said, violent rate ascents, Bitcoin dropped by 76%. Yes, it kind of does that. Each time, Raoul Pal said, in my opinion, what actually occurs is that as liquidity leaves the system, liquidity leaves cryptocurrencies in the same way that it leaves emerging markets commodities. As they do from all of these, return when liquidity does. But every withdrawal from every time there is a Bitcoin bear market, there is less than there was previously approximately, was 97.5% down the first time, and 92% down the second, 80% third time. Most likely 70%, as you are aware, the first cycle down to 98 and 5% the following cycle. Raoul say if you know that if it grows properly and works well, it will be 80% correct, and the next time around, Bitcoin will be lower. Let's back to the Raoul Pal interview.
Its bear market was the same as all the other bear markets. So even though we went through this extraordinary macro situation with this ridiculous inflation and huge, as you said, violent rate rises, Bitcoin went down 76%. It's kind of does that every time, you know? And so I think just what happens is as liquidity comes out of the system, liquidity comes out of cryptocurrencies, as it does out of emerging markets, as it does out of commodities, as it does out of all of these things. When liquidity comes back, it comes back. But each drawdown from every bear market in Bitcoin is less than the last. It's like ETH first time around was 97.5% down.
Wow.
Second time, 80%. Third time, probably 70%. You know, Solana, first cycle down 98.5%. Next cycle, if it does well and thrives,
right,
it will be 80%.
Right.
And Bitcoin will be less the next time around. Remember, John, we're a small echo chamber on crypto Twitter. There's only a small bunch of us, really.
Yeah.
There's maybe active, really active, 500,000 people. So there's 500,000 people cheering, shouting, screaming at each other, all of this, right? But when you look at the actual capital flows into crypto, it's been small. They've only just started recovering. So just because we're blessed with the ability to be ahead of everybody doesn't mean it's overcrowded, but it needs that money. We need to be front running the institutions, as we've always said.
Right.
And then it's all fine. If the institutions don't come, yeah, we're all fucked because it's going to go back down again. The only thing that's changed really, look, the Lightning Network hasn't really taken off. So as a payments rail, and we've got very efficient other payments rails, faster, cheaper chains that have been less centralized than the Lightning Network. I think ordinals are interesting because by actually putting the asset on chain, you're creating maybe a super safe storage because you're using the Bitcoin blockchain. Yes, it's inefficient. Yes, it's expensive, but my God, it's safe. Yeah, it's secure. So, okay, that's a really interesting thing, and people are just experimenting with it. So I don't know if it changes a lot, Bitcoin, but the other ecosystems, well, they can adapt and change because just by nature of what they are and how the chains work.
According to Raoul Pal, the sole thing that has altered really as a payments rail, the Lightning Network hasn't really taken off. Additionally, there are other highly effective, faster, less centralized payment rails available, more so than the Lightning Network ordinals are fascinating, Raoul Pal said in my opinion, since you may be constructing a very safe chain by actually putting the item on its storage because you're utilizing the Bitcoin blockchain. Sure, it's pricey and inefficient, but oh my gosh, it's safe, so that's intriguing, and people are just playing about with it. So Raoul Pal, not sure if it fluctuates greatly. Bitcoin, but other ecosystems have the flexibility to adjust and evolve since simply by virtue of their nature and how the chains work. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.